Today's symposium with his welcome address.
Sir, first of all, thank you all for being here for this annual event, which we always have after the budget. Uh, but I am really, really grateful. I mean, today we have one of the most important personalities whose views will be very, very important because he happens to be the Chief Commissioner of Central Goods and Services Tax, Calcutta Zone. And his views would carry some meaning as far as the budget is concerned. So, welcome to this chamber, sir. Thanks a lot for being here with us. I was asking Mr. Kumar that he has been recently come to Calcutta. That's what he was telling me. And I told him that, any senior officers who comes to Calcutta comes with a lot of fear. But once they start living in Calcutta, they start loving Calcutta. So I'm sure he will, in times to come, he will start loving Calcutta, and I'm sure he will enjoy his stay in Calcutta. And let me tell you, sir, it's the most hospitable city in the country. People are great hosts here, and they are very friendly. And I wish you a great stay in Calcutta. And I wish that you will make a lot of good friends while you are working and your tenure during the Calcutta. The rest of the speakers are our own members of the chamber who are heading the direct and indirect tax committee. Mr. Surana is heading the direct tax committee. Then Mr. Choraria is heading the again a indirect tax committee. Mr. Tulshan is again he though he's not with the chamber, but he has been a quite a regular. He has been attending our chambers meeting. I think earlier also you have attended, Mr. Tulshan. You have attended our meetings, right? If I'm not wrong. So he happens to be a partner of Al Tulshan and Company. And then we have Mr. Parak, who is also in our committee, a taxation committee, particularly in relation to GST, of which Shawn Kumarji is the in charge. Then we have Mr. Pasichia, who is also the Vice President of Bharat Chamber of Commerce. I don't think I need to speak much. I have only two, 3 points to take. Yesterday I got a call from Times of India as to they would like to have my comments on the budget. So I said, look, everybody would be speaking on consumption. A lot of reliefs have been given to the people as far as the budget is concerned. But I personally feel this budget, a very big announcement has been made in this budget as to the new tax code bill. I mean, to me, that is I would say, the cream of this budget. Uh, why I say it is a cream of this budget, because we all know that this tax code bill has been pending for last over 10, 50, 10. Every time we have been here in 15, 16 years. And it has been debated upon. And whenever the tax code bill came, it was very, very complicated. And this time they said that, we will have the tax code bill, which will be of half the size of the present. And the most important point which they said in the budget speech was trust first and scrutiny later. So that was a very important statement, the trust first and the scrutiny later. And why I say so, it is so important because let me tell you that as far as the income tax is concerned, I have the figures which says that over 5 lakhs cases, Suranaji will agree with me, that over 5 lakhs cases, over 5 lakhs cases are pending with CITA, and the pending amount of dispute was over 14 lakhs crores. Same is the case with the disputes which are pending before the tribunal. Same is the case where it is over 3 lakhs crore. Same is the case which are pending before the High Court, which is over. So if you take that sum total, it is equivalent to the total direct tax collection in a year of the year 2024-25. This is the total. Now, why this is happening? It is only happening because our tax laws are very complicated. I mean, the department, I mean, this is one area where you will find that we don't trust our own department. You have a faceless assessment. why the faceless assessment came into force, so that there is more honesty and integrity with the assessing officer. I mean, that was the purport of a faceless assessment. If that purport of the faceless assessment was there, then why should there be an appeal against an order of the assessing officer by the department itself? I mean, then you are not trusting your own officer, then don't have a faceless assessment. I mean, we know that we are all sufferer of high pitched assessment. I've been a sufferer of high pitched assessment. So therefore, this direct tax code bill, if it is simplified, as according to them it will be simplified, according to them it will be, people would be able to understand that particular code, and people will be able to fill up their own return. If that happens, I think that would be a game changer. So I personally feel that I would be waiting for the next week, and we would like to have a full-fledged symposium on, rather on this budget, but then on the direct code bill, which I feel, if it is on the right direction, then it will be a game changer. And I think we would like to have a greater debate. This chamber would like to have a greater debate on a direct code bill. And today's debate, I leave it to my other friends who are here. And Surana ji, may I ask you to start with the deliberations?
Honorable President, Nikhil Vice President, Symposium, honorable guests on the dais, fellow members. Before I move to my deliberations, I'll just say about this the litigation. You are telling 5 lakh appeals are pending, maybe more than that, even a little more than that. But the fun is that the oldest appeal still pending is 1994. And the disputes arises why? Because the government, the board, the CBISC, CBDT boards give circulars that we will not file any appeal against the order of safety appeal if the impact is less than 60 days, or to the High Court if the impact is less than 2 crores. But then in those circulars, so many exceptions are given, and each and every case falls within that exception. So if you want to give, then give without exception. Don't give 60 lakhs, you give 6 lakhs. Even I have fought an appeal before the High Court, quite a sensitive appeal, but the penalty was only 2 lakhs. And for that, the department has gone in High Court. The cost may be even more. So my request to Shravan Kumar ji is that at least to move to the CBIC, that you give lesser amount of fixed lesser amount of going to tribunal or High Court or whatever it is, but then don't give the exceptions, because if exceptions are given, then everything is covered. So that is what is going on. Anyway, as this is rightly said, that we will discuss the things when direct test code comes and what is there in the code and all that. See, even for appeals, there is a limitation in the act itself that it should be disposed of within 1 year. But then the court said it is directly not mandatory. So then what how it comes to? Anyway, so let me come to my daily questions. Sri Kumar, Sri Tulshan, Dr. Setan, Sri Patricia ji, Sri Choralia ji, Sri Parak ji, members and friends. At the outset, I must add that the budget proposals in terms of direct taxation have surprised us to a great extent. The Honorable Finance Minister, in his tax budget presentation,
lesser benefit than the taxpayer in any other job. Further, about 9.8% of the total number of salaried people will now be not paying any tax. The most interesting part of the budget is alignment of state policy with global demand, particularly the US policy. Whether to use the policy, which has been a major concern among investors, the Federal Committee has been named under the President with the main initial success and reduce the compliance burden on corporations. The panel will make recommendations within a year. In this direction, the upcoming director's code will streamline the tax code with no change to corporate tax rates and extended regulations based on stable investment climate. However, many cosmetic amendments could have been avoided, particularly when director's code has been proposed to be introduced. And so, as the President of Japan identified, it should be a game changer in all aspects, including revenue generation and less political. In the budget proposal, in order to reduce the compliance burden, only need to file budget returns for any assessment in 3 years to 4 years, with additional payment to 70% depending on the period of the sale. This is praiseworthy. It may also be noted that the authority will disallow filing of returns if reassessment notice is issued after 4 years from one committee, unless reassessment is required. Rationalization of previous and TCS provisions is an important step. No requirement to collect TCS and RRS, that is foreign remittances, by way of loans from financial institutions for education. No requirement to collect TCS from sale of goods. No requirement to deduct for collectors at higher rates, where deductions are not filed. Tax returns and delaying deposit of TCS collectors to the date of filing of TCS expenses is decriminalization, which is a welcome step. There is some good news for small calculators, which gross receipts is less than 5 crores. Since the validity of registration for these steps have been proposed to be extended from existing 5 years to 10 years with the tax transfer security contribution. Besides, person making contribution to value during the financial year aggregate of 10 lakhs to the end of the financial year, which will be treated as substantial contribution, shall be only reporting in the tax return. Further, little and concern sorts of substantial contributions are made to the fiscal reserve. Though under new design, directions are not allowed in the city, corresponding amendments should have been made in instruction of the so that the period of 5 years is also extended for 10 years. Long-term capital gain tax for business costs rationalized supply consideration. As late, the government identified the importance of cryptocurrency that has been included in the definition of the government. Simplifying the merger process and extending the rate is likely to risk corporate to structuring permit business in this case, we might be noted that the provisions that in this very far before of business process have been restructured to reduce it to 5 years only. In the context of international taxation, proposal to introduce new freedom for taxation for non-living providing services in the facility is laudable. The proposal deals 25% of the total amount of money as income for the purpose of taxation. For that, the amendment will be executed the first of April 2026. Similarly, transfer pricing adjustments will be streamlined to be determined once in a group of 3 years of the option of basis. Detailed note highlighting the proposals having separately circulated. To these works, I conclude my address. The request is from this area, Chairman, indirectly to increase the share of the area. Thank you.
Kulcian, Dr. Chetan, Sri Patricia, Sri Suvarna. I think I will put it.
Oh, it shouldn't be the
Friends, I've been asked to present my observations on capital markets. Uh, Budgets has progressively become a non-event for the capital markets, and that was very much evident when, on the day of the budget, less than 1% movement on the Nifty happened. And today also, if it is lower, it's lower more because of global factors rather than something to do with the budget or India. And capital markets not only is treated as a barometer, it's like a sum total of many factors. So let's go in, quickly first into a backdrop in which the budget was announced. And I have just 4 points. One is globally, it's a VUCA world. It's volatile, uncertain, and complex and ambiguous. In terms of we are having geopolitical issues globally, uh, it's happening right now, and some may come up in the near future. Um, then we have macroeconomic issues. So there are sanctions on by some countries on some other countries, which have brought us sort of a global slowdown in terms of demand, and of course supply chain disruptions are only making the matters worse. And then there are the tariff wars. On the day of the budget, of course, in the morning there was only a threat looming large, but by the end of the day, the tariff war actually started. Second is, let's come to India. So there is a political stability after the 2024 general elections, although with a slightly weaker mandate, but there is a political stability. But the weaker mandate might have been a little disappointing for developmental economics and more encouraging for freebies economies. However, I think the election results of Haryana and Maharashtra have brought back that positivity. And then there is a slowing economic growth, which was primarily led by slowing urban consumption, and that's where you place the middle class. And the government capex, which was doing the heavy lifting for the economy all this while, also was much lower than the budgeted because of elections and other factors. And but in this process, of course, I mean, government revenues were growing. Even direct taxes was growing by 17%. Uh, let's come to the economic survey. Uh, it highlighted, that how it was important for India to have a consecutive 10-15 years of 8% per annum growth for achieving the dream of a Viksit Bharat by 2047. And to that extent, it highlighted the importance of deregulation and government getting out of the way. And this certainly sets the stage for more regulatory and administrative reforms coming forward. Uh, in my opinion, it was one of the finest economic survey documents that I have read in the recent times. Very comprehensive, and it offers the government a script for what to do. It was bold. It's by the finance ministry department only coming out when this government has been around for 10 years. So I would say it's very bold and pragmatic, and speaks volume about the government's acceptance of the fact that there is a lot to be done. But it just came before the budget, just before the budget. So government intent is clear. It intends to walk this path, but it will be done going forward. Some announcements were made in the budget also for the reform, especially. And finally, capital markets. After a stupendous bull run for the over the last 5 years, where the Nifty went up from 7,600 odd to 23,000, it went up to 26,000, and now 23,000. Uh, with just one correction in between, meaningful correction in between in 2022, and for the last 4 months that we have witnessed recently. Now, this period saw a surge of retail investments, both direct and through mutual funds, SIPs. And but this young generation of new investors have been intoxicated with the kind of returns that they have, because they've never seen a sustained market correction. And particularly, the kind of rally we have seen small and mid caps over the last couple of years. And then, of course, that's why we have seen a reaction of about 20% from the peak for the small cap index. On the other hand, we had US dollar becoming stronger against all currencies, against emerging markets and other all currencies. So rupee also went down against this. US markets going up. So global equity interest moving towards the, more of towards the US markets, where the valuations are still high. But if they correct, as the economic survey also highlighted, we need to be very careful, and that is the reason why FPI is selling. But the confidence of our retail investors is that the domestic institutional investors have been buying. This was the backdrop of the budget in which. Now let's come to the budget. In my opinion, it was a very prudent and balanced budget which smartly navigates the multiple challenges at hand, and it is ticking the many of the boxes very rightly, and sets the direction very clearly. To start with, the 1 lakh crore relief in direct taxes. So politically useful, tick mark. Relief for middle class, which was, much not, the feeling was the middle class has been ignored for quite some time. So yes, tick mark. And imagine 1/3 of taxpayers will be out of tax net, not out of tax returns filing, but out of tax net. I think that's outstanding. And combined with relief on TDS and TCS is likely to leave more cash in the hands of the middle class. And this can induce a lot of more savings and investment. Another tick mark. It can lead to much greater consumption, and so will lead to consumption growth, which was required. Another tick mark. Meanwhile, private sector capacity utilization to go up, which is a necessary condition for private capex. This is somewhere which is not happening, but of course, private sector investments is not happening much, but then the condition for that, one condition is that capacity utilization has to be higher. Let's hope that this demand surge will lead to some kind of a capacity utilization going up. And now about the government capex on infra. A lot of people, have this impression that the government is not going to spend on infrastructure. Then what is going to happen? But let's see, is it really the case? FY23 government spending on capex spending on infrastructure was 7.5 lakh crore, went up to 10 lakh crore budgeted for FY24. Finally landed up at 9.5 lakh crores. Very good growth. For FY25, budgeted 11.11 lakh crores. Revised estimates at 10 lakh crores. And this was mainly because of, the slowdown was because of elections coming in and other related factors. And so, in my opinion, perhaps even 10 lakh crore may not get fully invested. But for FY26, it's 11.21 lakh crores. Now, just imagine, actually in the recent years, the spending government capex on infrastructure has gone up from 1.5% of GDP to 3% of GDP, which is by no means very modest. So I think, and this leaves me with, like if you come down to corporates in these sectors, there are healthy order books exist, for the next 12 to 18 months, order books are all full. And on top of this, when this 11.21 lakh crore also gets in the play, then it will further, the order books are likely to remain healthy. And so I don't see that as a very negative point. But stock markets have actually reacted on this sector, and markets have, by maybe valuation correction has happened because of more, in my opinion, on sentimental reasons. Our discussions with such companies suggest that they are not worried. It's just the public is more worried than them. Fiscal consolidation is an important thing. So it remains, the consolidation remains a WIP. 4.8% going down to 4.4% is the target. This will lead to macro stability. Inflation will be under check. And it sets the stage for interest rates coming down and sustained economic growth. Another important tick mark on the box, ticked. Philip for MSMEs is there, preparing for changing global economic dynamics, for example, reworking on trade agreements. Harley Davidson custom duty has come down. So this was an important ask by an important country, and we are addressing that also, maybe slightly symbolically, but at least there is a gesture. And then we are on a mission mode to make in India as a manufacturing hub for global markets, particularly in the fields of, say, leather, toys, footwear. Some of these industries are very, very prominent industries for West Bengal. And so I have highlighted them. And then, of course, regulatory reforms. There are non-financial regulatory reforms for which the government is setting up a commission and FSDC to be taking care of the financial sector, checking the financial sector regulatory reforms, whether they are in alignment with government policies and legislative intent or not, which is very much important. And the government has, for the first time, as a part of the budget speech, the finance minister has said so. Of course, one miss is, of course, there that double taxation on corporate profits still continue, which will be, which if would have been removed, would have unleashed animal spirits for which, of course, we can expect these things in the times to come. Finally, coming to the impacts on the capital markets. So in my opinion, because of the fiscal stability, there is stage is set for a long-term sustained growth of the markets. In spite of the reds that we see in today's markets, in spite of that, I'm venturing out to say so. And because macro stability is there, fiscal deficit will be in check. There is no high inflation amidst, mind you, amidst global turmoil we are talking. Now, RBI can also infuse liquidity where required, apart from interest rates coming down. Then, as I mentioned, public capex is a work in progress. So, stocks may remain volatile on valuation adjustments, but corporate earnings on capex, public capex is going to remain good. Consumption growth expected. So, discretionary consumption, जिनको हम लोग consumer durable बोलते हैं, वो FMCG, automobiles, particularly the small cars and two-wheelers, and in a little way, even reality and building products, they are all going to, are likely to gain from the budget. However, we need to see how private capex shapes up, because this capacity utilization is way below what this demand can actually create. So this is my only question mark, how the private capex will shape up, which will have a meaningful role to play in the capital markets growth going forward. So of course, we grow, as we invest more, we save more, we invest in SIPs, and the markets are going to remain healthy. One caution is there that, earlier there were, in the previous regime, there were tax incentives for long-term thinking. Okay, and even RBI has said that this is required. But now in the new tax regime, the investors and citizens are empowered to do their own tax planning the way they want to. But as we have seen in F&O, where 90% of the people have actually lost money, it is important that we also, kind of understand that the public at times needs to be handhold. The new generation investors need to be handhold. I think that's a caution, whether we will be able to play the game of investment like a test match, or we will continue to play T20. Markets are now, as far as market are now going to watch the quarterly corporate earnings growth, quarter 3, quarter 4, next year's FY26. But the biggest game changer is going to be this tariff war. Everybody is on the tenterhooks as how this tariff war is going to shape up. Markets have no clue about that. Nobody has a clue about that. Global geopolitical and macroeconomic situations are also going to play a major role Nobody has a clue about that. And we need to be on high alert as far as valuations are concerned, both in US and to some extent in India, although a lot of correction has happened in India. And money making is not going to be easy. My suggestion to everybody is, जो past में हमने tailwind देखा है, money making is not going to be that easy. It's going to be needing a lot of patience, long-term perspective, having an asset allocation based on having a goal-based investing or investment objectives के alignment में आपका asset allocation हो, ये एक important play हो जाएगा. And diversification across asset classes is going to mean a lot. With 2 years of small cap and mid caps being the top performing asset class, and in 4 years, in the last 5 years, small and mid cap being the top performing asset class, we might not see that repetition happening in this year. And in equities also, large cap maybe actually do better. And importance of fixed return with interest rates के लिए नीचे आने के लिए stage being set, I am sure we have a situation where fixed income instruments like debt mutual funds, they will be back in fashion, and long duration play, medium duration play is required. And of course, when there's uncertainty all around, bullion, gold is important. Silver is tipped to be doing better than, because their ratio of gold and silver is moving a little more in favor towards silver. And of course, SIP is the best way to go forward. So I would say that, capital markets are driven by economic growth and corporate earnings. And we have seen that 10 to 15% years तक economic survey ने बोला है कि 8% का growth होना चाहिए. The government will do well to focus on, with a mission mode, on 8% economic growth. Thank you.
Thank you. Sir, I think we should be a little brief in our presentation, because the best part of a symposium is question and answer session. Because the members present here is more interested in a question answer session. So I think this, of course, is not applicable to Shravan Kumarji, but I would say the other two speakers, if they can be a little brief, and we can have more on question answer session. So if we can have Mr. Tulshan and after that Mr. Parekh to make their presentation.
So I have a presentation. Can that be set up? Thank you. I would like to extend my heartfelt welcome to all of you for having taken out time today to deliberate and have this panel discussion. My warm regards and heartfelt gratitude to the board members and flag bearers of Bharat Chamber of Commerce, starting with Dr. N.G. Ketan, and to our special guest in chief, Shri Shravan Kumar sir, to Surana ji, to Sandeep Churaria ji, to Naresh Pachisia ji, to Vikash Parekh ji, my fellow speaker. So we would be briefly going through few points which I would be talking about from the perspective of GST proposals which have been proposed, GST amendments which have been proposed in the Union Budget 2025, and few points will be covered by Vikas Parekh ji. So let us see. These are the summary of the points which have mostly been already discussed in the 55th GST Council meeting, which was held on the 21st of December. And these have been again amended. These have been put forward in the union budget as well. So per se, there have been nothing new which has been mentioned in the union budget. This is just an extension of what was announced or proposed in the 55th GST Council meeting on 21st of December. Now, the Finance Bill 2025, we would see the section 116 to section 129 of the Finance Bill 2025. These pertain to GST. Okay, so we are focusing on these. both of us. Now, you may ask that, sir, when would these be notified? These are not notified yet. So it has been mentioned, even though when it becomes a Finance Act also, there may be different dates wherein by notifications or circulars that these sections of the finance bill may be notified. So 116 to 129. Now, let us begin with the first point, which is the reduction of tax liability on outward supply when a credit note is issued. So, we already know this has been announced in the 55th GST Council meeting that now, if a credit note is issued by a vendor, by a supplier, so that needs to be the input tax credit consequent to that, which the recipient has purchased earlier. For example, let us see this example. Let us see this example. Now, a purchase has been made by Mr. B of 1 lakh rupees. He has paid 18,000 to Mr. A. Mr. A is the vendor. He has deposited 18,000 to the government. Okay. He has filed his GSTR1, everything. Now, he has issued a credit note. Now, credit note is of 20,000 rupees. So, 3,600 rupees he is going to downward adjust his tax liability. Earlier, he paid to the government 20,000. Now, he will only pay remaining. He will pay what? 3,600 he will adjust, and net amount will be 14,400. So he is taking the benefit of downward tax adjustment against the credit note issued of 3,600. But now the government has made it going to legalize this, and it is going to be amended in section 634(2), the credit note section, that only if the recipient has reversed his input tax credit, which is pertaining to the credit note issued by the supplier, which is of 3,600, if he has reversed it, then only the supplier gets the benefit of downward adjusting his tax liability in his GSTR 3B. Now, this has already been incorporated in the invoice management system. As we would be aware, this is a 3-month-old invoice management system, wherein, see, I will just show you few screenshots of invoices. See, this is the invoice management system. These are the credit notes which come to the recipient's dashboard. Now, if you see, there is no pending option. So, for example, this credit note which comes of 3,600 rupees, to me, the purchaser, I have to either accept it or reject it. I say that, sir, I don't recognize this credit note, I'm going to reject this. If I press reject, and what will happen? My GSTR 2B I recompute. So in my GSTR 2B, I will not have to reverse that 3,600 from my input tax credit, but the consequent action on the supplier will be the next month's GSTR 3B return of the supplier, his table 3.1a, where he declares the output tax, that 3,600 will be increased because he has already adjusted 3,600 rupees of tax this month, but the recipient has rejected that. So he will have to pay the next month 3,600 rupees. So he's not going to get that benefit. Earlier, this was nowhere there mentioned in the law. Now, this is being proposed to be amended in section 34 subsection 2, and new rule will also come out, that is rule 67B, as in how to reverse and how to manage this. So this has become very important. So now basically the supplier is at the mercy of the recipient. Usually we keep hearing the recipient is at the mercy of the supplier, know your supplier. Now this is the other way around for this. Now, for example, I took this example. Now these are for 8,858, 210 rupees, these are rejected by the recipient. These are credit notes. These are auto-populated in the supplier's GSTR 3B for the next month. In table 3.1a, he'll have to pay tax because last month he adjusted, next month he'll have to pay. Now, if we see, this is an extract of a GST notice, wherein usually what we have seen is that when an ASMT 10 comes or DRC 01, a show cause notice comes, or an intimation also, DRC 01A, the department usually takes the entire input tax credit reversible from GSTR 2A or 2B, the entire amount for the entire year of credit note, and they say that we don't have any record or breakup in 3B. You please explain that how much you have reversed, how much you have not reversed. So this entire amount, for example, in this notice of 2,90,000, 2,90,000 and 7,000, this is the entire input tax credit reversible against credit notes appearing in my GSTR 2A or 2B. Now I have to respond. Now, if I am unable to respond, or if I am unable to explain to them that, sir, I did not claim the input only, so why will I reverse? So in those cases, many a times that the particular recipient or the taxpayer, even though he has not claimed the input, he has not reversed. He does not need to reverse, but he will have to pay this particular amount. Now, what is happening is when you recompute your GSTR 2B, you select 5 credit notes, you reject 5 credit notes. So you have 5 debit notes in your
tally system. So you're only going to accept those. So this hassle will be very much resolved. So it's a very good initiative. Uh, these few points will be covered by Vikas ji, the penalty and stuff. Okay, now ISD. So we must be aware that there is something called as an input service distributor. Now, what is an input service distributor? Let us take an example. In Maharashtra, I have my HO, head office. Now, my head office is a wholly owned subsidiary of a foreign company. Now, my foreign company, this company gives me some technological software. So I have to pay royalty. If I am paying royalty, if I am importing technological software, it's import of services. If it's import of services, that is notification 10 2017 IGST rate, we have to pay RCM. That is the head office has to pay reverse charge mechanism on the import of services. Now what happens is this head office does not have any sale, but he has 10 different registrations all over India across 10 different states. So these are 10 distinct entities in Bihar, in West Bengal, etc. Now, 10 crores of money which I pay on the royalty, 1 crore 80 lakh rupees I paid to the government, 18% for instance, your RCM. Where will I utilize it? So I have to spread it across to 15 different states of my own registrations. Earlier, what used to happen, the RCM input was not covered. So in the July budget, RCM input, to make it more attractive, to make ISD registrations, input service distributor more attractive, what they did, they included intrastate RCM input. But they had not included the interstate RCM, IGST inputs. So now what in this budget, they have expanded the scope to make ISD more attractive over and above cross charge. Cross charge, we know we are cross charging from one unit to the other, but they don't want that. They want ISD to be taken forward. So now under ISD, you can, the HO, he can buy the invoices, and with the mechanism, he can pass on the input tax credit on RCM on intrastate transactions, on interstate transactions, and on normal transactions on common input services. You know that, right? So this is an advantage. And minded one more thing. Now the registration of input service distributor has become mandatory from 1st of April 2025. What does this mean? This means that earlier we were doing cross charge. Now cross charge is going to be entirely removed, and input service distributor only mechanism to go ahead majorly will be passing of credit through ISD registrations. You have to take ISD separate registration, separate, it will be a separate GSTN. PAN will be same, head office PAN will be the same, state code will be the same, but GSTN will be different, right? So this has become mandatory, the registration also. Now, this will be discussed by Vikasji. Now, there is an enabling clause which has been put forward in the your GSTR 3B section. What does that mean? Now, as we know that IMS is going to become mandatory in a few months, we already know GSTR 1 data, whatever we put in, it auto-populates in our GSTR 3B. Now, what the government is doing, they are planning to hard lock the figures which are auto-populated in our GSTR 3B sale from our GSTR 1A, and in the input column, table 4, from our GSTR 2B or the IMS. So they are going to hard lock. Hard lock का मतलब क्या हुआ? मतलब you will not be able to make any amendments or changes. It will be grayed out. This has not happened. It was announced earlier. It should happen from January 2025, but there has been a particular update on the GST portal that it will be postponed. So now what will happen, sir? Try to understand where is the legal mandate for this. So they are making this legal mandate. They said ki, oh, these are all portal updates. Anyone can file a writ, say that where is the legal mandate for this? So what they have done, they have made an amendment in section 39, which is a GSTR 3B section, saying that we are going to file GSTR 3B with certain restrictions and conditions. And they have not specified those, but it is an enabling provision. Now, what are those restrictions? We already know these. GSTR 3B can't be filed if GSTR 1 is not filed. GSTR 3B of previous month is not filed, so it's a sequential filing. Next month, GSTR 3B cannot be filed. Now, we already know this last 2 budgets earlier. 3-year-old GSTR 3B, 3-year-old GSTR 1, 3-year-old GSTR 99C, they cannot be filed because they're making it time barred. Now, this sequential, all of this. So hard locking of auto-populate. So this is going to happen in the next 6 months. So they are planning it and making it a legal mandate now only, that we are enabling that certain conditions will be there while filing GSTR 3B. Okay, now for warehoused goods. Now we already know Schedule 3. What is Schedule 3? That is those transactions on which GST is not charged, in respect to which that there is no supply. It will not be considered a supply of goods or supply of services. So a new amendment has been put in here wherein they say that, sir, what is an SEZ? It's a deemed foreign territory inside India for the purpose of tariffs, duties, etc. We know that. Same way, your free trade warehousing zone, that is also a part of SEZ. So now what they have said is that, sir, if you are selling, if you're transferring your title of goods from one SEZ to the other or from within one SEZ, and if it is warehoused in an SEZ, there is no problem. You don't need to pay GST on that. What does that mean? If in one SEZ I have certain goods in a warehouse, right? Like the way custom bonded warehouse it is. So we already know if it's in custom bonded warehouse, before we file bill of entry for home consumption or shipping bill for export, if I'm going to transfer the title, no GST. Just the way high C sales are there. Same way, if in a warehouse in an SEZ or in a free trade warehousing zone, if the transaction happens, if I sell it while it is warehoused, where it is custom bonded warehouse there, so no GST will be there. So this is the particular benefit which has been given to us. Now, we already know that the vouchers, like for example, Pantaloon vouchers or any vouchers. So vouchers, when we purchase vouchers, we pay money. So it will be considered as already prepaid or actionable claim. So this has already been clarified by Circular 243 that you don't need to pay GST when you are purchasing voucher. When you are purchasing the underlying goods and services, then you have to pay GST. So this has already been clarified. So an amendment has been made to remove the time of supply provisions. When the main provision is only not there of voucher taxability, so there is no point of having the time of supply, place of supply provision. So that has been deleted. Customs, 1 2 points I just want to mention, before I hand it over to Vikas ji. The one point in customs, which is a beneficial point, is that now there has been a clear-cut time which has been mentioned, which has been provided of 2 years for provisional assessments. Earlier, there was no time limit. It would go on for years. Now, for pending cases, it will be 2 years from the date of the Finance Act. So that is one benefit which has been provided. Second benefit is that in case if while filing my bill of entry, while making payment in cash challan or whatever there, IGST, I made extra payment of BCD or ISD. Now, earlier there was only one provision, that was of amendment. Now, revision of entries, bill of entries have also been provided. So now I can amend I can revise my bill of entry and I can apply for a refund of extra payment of tax within 1 year. I can do that. So that benefit has also been provided. More or less, these were the briefings. After the session is over, during the interaction session, we would encourage everyone to ask questions, whichever, even if it's not related to the budget, we would like to. And I would like to pass the mic to Vikas ji to continue the session. Thank you.
Thank you, Ishan ji. Respected Sri Shravan Kumar ji, Chief Commissioner of CGST and CX Kolkata Zone, Sri NG Khetan ji, President of the Chamber, Sri Naresh Pachisia ji, Vice President of the Chamber, Sri SM Surana ji, Sandeep Choradia ji, Ishan Tulsian ji, other committee members, ladies and gentlemen. At the outset, I would like to thank the Chamber for providing an opportunity to share my views on the recent budget amendments on GST. Sorry. Ishanji has already explained some of the provisions. I will just speak about 3 or 4 important points. So one is that in this budget, there has been a provision related to implementation of track and trace mechanism. This track and trace mechanism is very important. The government will be coming out with the provisions and detailed rules regarding the same. Basically, they want to introduce this provision to cover certain specified goods for which are maybe evasion prone, tax evasion prone goods, and for any of the dealers or any of the persons who are storing those goods or dealing in those goods, for them, there will be certain mechanism by which a unique identification marking will be done on these goods. This unique identification marking will be in the form of a digital stamp or a digital mark or any kind of marking by which you can track the movement of the goods. So in the entire supply chain, you'll be able to track these goods, where these are stores, what is the production process, how much has been produced. So entire thing will be covered under this, and there will be legal framework apart from the technological advancement involved in this. So it will be a blend of legal mechanism and technological advancement, and there is a penalty of 1 lakh or 10% of tax payable, whichever is higher, for any non-compliance relating to the reporting related to these goods. There will be reporting requirements, basically, that how much you have produced, how much you have stored, what is being transshipped and all. So if there is non-compliance, then there are penal measures as well. So this is one of the things. Another is that presently, under the law, if you have to make any appeal against any adjudication order, then you have to pay 10% of the tax as a pre-deposit. But this is not applicable in cases where there is only penalty is leviable. Only tax is leviable, then you can pay with tax with penalty. But if it's only penalty, then only in case of e-way bill related penalty, wherein suppose there is a penalty which is related to non-compliance of e-way bill, currently you have to pay 25% of that penalty amount as a pre-deposit, and then you can file an appeal. But now it has been extended that in case of any appeal related matter, if you file an appeal, any penalty related matter, if you have to file an appeal, then you have to pay 10% of the penalty amount as pre-deposit at the first appellate authority level. And then again, when you appeal at the appellate authority, that is the GST, then again you have to pay another 10% of that. So this is, in fact, this is a good move by the government, because many kind of unscrupulous players who are involved maybe in the fake invoicing things and all, there was no mechanism for that, because of the circular which was there. They did not have to pay any taxes because there was no supply involved. It was only a paper invoice, but penalty was applicable. And because of the delay in the GST, they knew that maybe for at least 5-7 years they don't have to pay anything. So now, even now, when they have to file an appeal, they have to pay 10% at the first level and 10% at the second level. So this is going to cover those cases. Another very, very important landmark provision which is brought in. In fact, this is from a retrospective amendment from 1st July 17 onwards. Very recently, you must all have heard about the Safari Retreats judgment on allowability of ITC related to immovable properties. What has happened that in Safari Retreat, that if you are availing ITC on construction of any immovable property and let's say letting it out, whether as a you are constructing a mall or any other provision of any other constructing any other building and letting it out or using for own office, as per law you are not allowed any GST on that. Section 17(5) subclause D restricts that input tax credit. But the apex court in the judgment of Safari Retreat had told that in the law the words mentioned are any immovable property other than plant or machinery. So whether that building which is used for further renting it out can be termed as a plant is something which needs to be looked into, and their credit may be allowed. And the matter was remanded back to the Odisha High Court for further examining this point. But as soon as this was done, the government filed a review in the apex court and has made a retrospective amendment that instead of plant or machinery, now it will be termed as plant and machinery. So to nullify this judgment, so this is with this effect, whoever was claiming and carrying forward this credit that in future we might be able to use it, or whether we are letting it out, the leasing out is a very big industry, especially in commercial industry only. So now this is a very litigated area, and with this amendment there is very high probability that it will not be possible maybe for anyone to claim this, but still the courts may still look into it further, because this is a very important aspects. And Mr. Khaitan and
You are
Shravan
absolutely
Kumar
right,
would
sir.
also-
This is one area, retrospective amendment, which formed part of this budget, and it has come into force from 2017. And particularly in West Bengal, in West Bengal, one of the logistic industry is a very big industry. People are putting so much of logistic, and then where you put a logistic industry, you will not be able to get input tax credit on the construction be done. It's a very, very serious issue. There is no doubt about it. A lot of people would be affected because its retrospective effect has been made from 2017. In fact, this is one area we'll be making a strong representation on this and I think it's a very, very important issue because a lot of people are concerned with this particular issue.
Yes, sir. And in fact, this is another thing that for overturning the judgment, these kind of retrospective amendments, it is very difficult for any of the SSEs or the taxpayers to think about this, because you have done something based on the current law and now it has been changed retrospectively, so it impacts a lot.
Sir, in fact, today I told a few press people that it is confiscatory in nature. Any retrospective amendment is a confiscatory in nature, because what are you doing? You are confiscating the relief which I have got, and then I have to pay from my own pocket. I mean, this is basically confiscatory in nature. Yeah, absolutely. Yeah, yeah.
So these were the important GST related amendments which I would have liked to highlight. And just one last point, although it is not related to GST, but I would just like to highlight for the benefit of the people here, that there has been two things. One, for the startups, the exemption has been extended for any incorporation made up to 31st March 30. And for MSMEs, the limits of investment and turnover has been increased. The investment limit 2.5 times and turnover double for the classification amongst micro, small and medium enterprises. With these words, I would like to thank you for a patient hearing.
So now I would request our chief guest. I mean, we are all waiting for him to tell us as to what he feels about the budget and how would he take it.
Good evening, everybody. Shri N.G. Khetan, President, Bharat Chamber of Commerce. Shri Naresh Pachisia, Shri S.M. Surana, Shri Sandeep Choraria, Shri Ishan Tulsian, Shri Vikas Parak, distinguished members of the Bharat Chamber of Commerce, ladies and gentlemen. I'm delighted to be here, to be present in the campus of the Bharat Chamber. I feel privileged to share the dais with the distinguished panelists. I think most of the budget has already been covered by the speakers before me. So I have quite a little to speak on the budget. Of course, we will be welcoming the questions and trying to answer to the best of our ability. A couple of observations on the budget and then a little bit about the GST which I implement. So I will be speaking a little bit about the GST, which has been very well spoken by my two speakers here. And a little bit of the last budget also, because that was quite a good budget on the GST. Some really good things were introduced. So overall on the budget, I have 2-3 observations to make. The first is related to a fiscal deficit, which I think the finance minister has done exceedingly well in containing the fiscal deficit to 4.4%. That shows that the government has managed its fiscal affairs quite well, and we are in the right path. Second, as we all had welcomed this great exemption or other reduction in the income tax benefit allowed to the middle class, which is where the government is about to lose 1 lakh crore. But that much more money will come in the market, which will either be invested or be consumed. In either case, it will spur the economic growth, and which I think is a very, very bold and welcome step. With these two broad observations about the budget, I will restrict my discussion about the GST part, because already a lot of things have been spoken about direct taxes, about the capital market, about general aspects of the budget. Even on the indirect taxes, my colleagues have quite beautifully captured the essence of it, which has been done in this budget. I don't think, maybe a couple of things they have missed out. One part is regarding settlement commission, which will government believes that it is no longer required. We have the appellate mechanism to address the issues of indirect taxes. So settlement commission is going to be put to rest. The applications pending will be taken care of by the interim board. So that is one another development which has happened. Then all other things I think they have more or less covered. About the 10% pre-deposit on penalty, I think there seems to be little confusion. See, earlier for going to appellate authorities in such penalty issues, there was a requirement of pre-deposit of 25%. And the trade represented that 25% is a bit too high, whereas for the cases where there is a tax involvement is there only 10% of the amount is to be pre-deposited for going in appeal. Considering that the government has said yes, 10% is fair enough, and they have reduced it from 25% to 10% in cases where only penalty is involved. So it's in a way a simplification of this thing and meeting of the trade demand. So the overall budget has been trying relating to taxation. I'm talking about taxation has been this year also and the last year also. There is a very clear attempt to simplify things, to remove ambiguity, to make things transparent, and then promote ease of doing business. Last year budget, if you are aware, there were I will mention 4 provisions which were brought last year. 2 of the provisions have short-term impact and the 2 have long-term. The short-term ones already there are circulars and we are already kind of trade is getting benefit of that. One was regarding the blocked credit, where certain invoices issued up to a particular period, the credit beyond that was not admissible. So now that has been allowed, and the trade is taking benefit of that. And the second is regarding the waiver of penalties and interest in respect of demands issues for the period 2017, 18, 18, 19, 19, 20, and 20, 21 by way of introduction of section 128A during last financial year, in the last budget. There are 2 other long-term things created in the last budget. One was introduction of section 11A and the other was introduction of section 74A. Section 11A pertains to the cases like what Mr. Khetan just mentioned about for bringing retrospective amendment to kind of impose tax burden, which a court has said that it should not be there. Section 11A has been brought in the GST Act to take care of a situation where there has been a practice in the trade of either non-payment of tax or payment of tax at a lower rate than actually mandated by the law. And there is a wide prevalent practice. So once it is detected that actual rate should have been higher, now suddenly a lot of tax demands starts piling up. So now the government and with the empowerment under section 11A can waive off all such things and retrospectively say that yes, if there was no tax levied across the trade on this economic activity, on this supply of goods or services, then let that be the actual rate and only prospectively it will be charged. So the impact of this section will be felt in due course in the years to come. Similarly, section 74A was brought in the last financial year. We all are aware, whosoever has handled the audit of the department, that the auditors come and they find out there is certain irregularities, and then they see that this irregularity was there for the last 2 years, 3 years, 4 years, 5 years, though there is no intent, no misdeclaration, no suppression of fact, but the officers used to invoke 5 years period saying that no, there is suppression, and the 5 years demand used to be created merely because there has been some error in the process. So realizing that the government brought this section 74A, where the time available for raising demand in both the cases where there is a suppression and where there is no suppression is only 3.5 years. So that is also a big relief whose impact will be felt in the due course of time. So overall, what I'm trying to say, that the government in this budget and in the previous budgets also have attempted to simplify the tax structure And in this budget particularly have tried to create more and more demand. And I'm sure that this budget is going to have a very, very positive impact on our economy. With these few words, I think we will be welcoming the questions, and questions, like my colleague said, not only related to budget, but whatever related to my department. If you have any issues, anything, we will be happy to address that. And I must thank once again Mr. Khaitan and the Bharat Chamber for inviting me in today's this discussion. Thank you very much.
I would not like to respond to this because, but I would like to express the concern of the industry as far as this particular amendment on retrospective amendment has been made. The industry is very concerned for last, after the budget was announced, my GST team, who looks after GST in my office, we had a sitting today. I had a sitting today with my GST team, and they told me that a lot of clients are, particularly the real estate sector, and people who are putting logistic part, they are not really in a real estate sector. It is actually a business venture. Uh, they are very well concerned about the retrospective amendment, which has been affected from the since 1917. And I think government to take note of that, particularly in view of what you said in Section 11A of the GST Act, which came into force. But that was the intent, that if there is people has taken advantage of a particular provision of law, but the intent was to charge more. And if the intent was to charge more, and then you make that amendment, then that amendment should have been made prospectively, not retrospectively. So therefore, I think government would take note of Section 11A and look into this aspect of the matter, but this is a very serious concern as far as this particular budget on GST is concerned. I think those were our observation, and we'll be soon making a representation on that.
That's right. But let me try to say. I mean, I said, see, ultimately, that input tax credit is linked with the output tax liability. I'm just telling you. I mean, ultimately, it's a government decision, which whatever decision will be taken finally, and that will be binding for all of us. So the input tax credit is permitted or is allowed or is available when there is an output tax liability. With that intent, and in addition to that, Section 17 blocks, I mean, certain types of credit. Government in its wisdom has decided that certain types of credit, like on transportation or on the input used for the construction of immovable property, the credit will not be permitted. Now, this is a policy decision of the government. Government can change based on the representation tomorrow. What is see, plant and or machinery, and plant and machinery is a basically kind of a it's a typographical error. It's a drafting error. The intent was very clear that on the construction industry, the inputs used for construction of a building which is immovable property, there should not be the credit should not be available, because the building में कोई tax liability नहीं है, and there's no tax to be paid on that. So this error in drafting plant or machinery and plant and machinery has been corrected in this. Now the government, in its wisdom and considering the demand of the trade and industry that credit on such activities should also be allowed, can always take a decision and pass this thing.
Okay, so now I leave on the floor.
Yeah, and I must mention that हम सबको हिंदी बहुत अच्छी तरीके से आती है. So anybody who is interested in asking in हिंदी, बहुत आराम से आप पूछेंगे, हम लोग उसको ढंग से जवाब दे पाएंगे.
So, may I start from the left? If anybody has any question on direct or indirect? Anybody? Please, nobody?
Either.
Good for her.
Yeah, very good.
Then may I all?
Yeah, he has something. Yes.
Like in income tax,
Huh.
we have got assessment order. We do get assessment order every year, and it gets a relief of mind that yes, up to certain date, my assessment is 100% clear.
Hmm.
So I'm not going to be worried until unless a scrutiny notice is served. However, in GST, we do not find such clear and ambiguous assessment order, so that we are very clear in mind that up to such and such date, my GST assessment has been done. So anything would you like to add?
Yeah, so whatever assessment you are making and you are filing your return, that is your final assessment. So unless there is an intelligence saying that there has been some suppression or the audit finds out something, otherwise that is the assessment done by you and that is the final assessment. Yeah, so there is no need for an assessment. Government has said and placed trust on the trade and industry and says that whatever the liability you decide and you pay and you file return. 98% of the taxpayers, they take registration, they pay tax, they file return, and we don't have anything to do with them.
Second is actually not related to GST, but GST portal is quite fast in updating the details. Like every day I update my invoices, e-invoices, it is updated there in the system and it is there. But in Income Tax Act, whenever I deduct a TDS and the TDS returns are filed every month with the name of the person and their PAN number, etc., all the TAN number, whatever it is. The same is reflected after the end of the quarter. So if this is done on a monthly basis, also like what is done in GST, I think it will simplify things because people will be very clear that whether other party is depositing tax or not. Okay. So people are asking me that I have deposited tax and give me the credit. Okay. Or sending me a consolidated challan. It's not an individual challan which I get. It's a consolidated challan and they're asking for individual credit. I'm not able to get until and unless I get a 26 AS after the end of the 30 days after the end of the quarter. So that is a challenge that should be addressed by the government.
No, we will make a representation. We'll make a representation of that.
Only thing I like to add when we will send it to the income tax. See, the GST is a transactional tax. That means every time you issue invoice, you pay. You calculate your liability, and whereas the income tax is a annual kind of this thing where your annual loss and profit and whatever income you have, you pay tax. So maybe because of that, they are not in hurry to do it immediately. उनको पास तो पूरा साल है कि आपकी लायबिलिटी तो साल के बाद में डिसाइड होगी
बट टैक्स लेते समय टीडीएस काटते समय तो पूरा
ठीक है तो
तैयार रहते हैं ना आपको क्या
हर महीने आपको रिटर्न फाइल करना पड़ेगा सो दैट विल इंक्रीज योर कंप्लायंस बर्डन अभी आप क्वार्टरली कर रहे हैं फिर आपको हर महीने रिटर्न फाइल करना
रिटर्न फाइलिंग इज आल्सो 31st of July. Now by the time 15th of June, I think our 26 days is ready from the fourth quarter of the financial year, which is a 45 days file. Plus if we have foreign income, so US and these other people, they've got a calendar year.
Yes.
We've got financial year. So for us to get their documents and all those things, that also takes time.
So for a listed company, we have to publish result within 45 days and for financial result within 60 days. So we cannot keep on waiting for all the returns being filed. All the last return is being filed till the end of
I think we can forward this to
We have already said that it's a good point.
Yeah.
We can take it up.
regarding giving more money in the hands of the consumers. So this is a good move, of course, but this is a good move. But there is the other side, flip side of it is that we do not have in India a social security mechanism. So that social security mechanism is missing. And because of giving more money or in the hands of the taxpayer may result in spending into the capital goods. Or in recent times, we have seen Nitin Kamath gave a quote that there is a lot of defaulters being made because of the personal loan and people shifting onto capital goods. So giving more money may lead to getting more of a capital goods rather than into savings.
So,
Okay. So
yes,
that
on
in
this
turn-
subject only.
Yeah. One second. He is asking us a question which should be addressed to finance minister.
Your point
It
is
is
well
beyond
taken.
our
We have to
competence.
discussing this internally, this issue of yours, that social security.
The
Thank you very
president was himself talking about this subject only just before we came into the meeting.
Okay. Thank you. Thank you very much. Kent.
Sir, we have to present the memento, and after that, Mr. Pachesia to propose the vote of thanks. So I would request you to do the honors and present the mementos to our guest in chief, Shri Shravan Kumar, Chief Commissioner, Central Goods and Services Tax and CX, Kolkata Zone, Ministry of Finance, Government of India. So there's another one. May I now request Shri Pachesia, Senior Vice President of the Chamber, to propose the vote of thanks and conclude today's symposium.
Shri Kumar, Shri Tulsian, Dr. Khetan, Shri Choradia, Mr. Parak, members of the chamber, guests and friends. At the end of this symposium, it's my most pleasant duty to propose a very hearty vote of thanks to our guest in chief, Shri Shravan Kumar, Chief Commissioner, CGST, and Kolkata Zone, Ministry of Finance, Government of India, for sparing some of his valuable time to address us today. I would also like to thank our esteemed guest speakers, Sri Shant Tulsian, Sri S.M. Surana, Sri Sandeep Chordia, C.A. Vikash Parak, for explaining us the implications and repercussions of various proposals made in the Central Budget 25-26. This budget brought about some notable changes to both direct and indirect taxes, aiming to simplify compliance, boost consumption, and support economic growth while being fiscally prudent. While reductions in personal income tax provide relief to the middle class, adjustments in indirect taxes seek to encourage domestic manufacturing and exports. The focus on key sectors like MSMEs, agriculture, and infrastructure reflects a balanced approach to development. Once again, I would like to thank our speakers for their insightful observations. With these words, I request you all to join me in carrying a hearty vote of thanks to our guest in chief, Sri Kumar, with appreciative acclamation.
Thank you, ladies and gentlemen. I would request everyone to join us at tea.